All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Let's go talk candles, and I'm going to talk about the candle nature of candles, and what kind of goes on here from a indicator standpoint, and technical indicators that can be used with candlestick patterns, and some of the favorite ones that I have found and how I use them. So let's go look at those here today. Before I do that, I want to just make a comment here in regards to the Fed. Uh, we have the Fed coming out here today in about 2 hours. Max, you said, what can the Fed say which can move the S&P 5% higher before end of the year? We already know they're not going to taper. That's mostly priced in. Yeah, I mean, the best thing the Fed can do is to get out of the way. Just get out of the way of the markets overall. That's the best thing that they can do to send them potentially higher here. Uh, One of the things I hate coming back to, but I'm going to simply because of what it was. I'm coming back here to 2007. Okay, and let's just go to May, and we'll go 2007. Because I don't want to give the impression that I'm calling for a long-term top here or anything. Yeah, maybe we are at a long-term inflection point. But one of the things that happened here in October of '07, market went up, it set a brand new high. It didn't set as many consecutive highs as what we're seeing now, but market went up, set a brand new high, and started to fall. And it fell on some really good economic data. Subprime was the hot word, but subprime had been the hot word through this sell off here in July and August. Then the Fed came out, they started to ease. Fed was talking all nice to this market, Paulson. Everybody's like, hey, you know what? We got this fixed, we got it under control. Lots of talking. Hey, market just set a brand new high, even in the midst of subprime. That tells us that the market's really bullish. Economic data is really good. Earnings are strong. We have growth. You saw some of the growth stocks just, at really high levels. Some of the Googles of the world trading up in the 700s, just making these monster type moves. That was the environment. Very similar to what it is today, where nobody could really think of what's the catalyst to take it lower. What's the catalyst to really send things down? Well, what was the catalyst? It wasn't anything new. It was all of those things which the market had already gone through, subprime being the main one, and it's saying, you know what? Subprime's okay. Subprime's okay. It's fine. Everything's good. And market starts to sell off. We start to see a little bit more of a subprime issue. We start to see Bear Stearns have real problems. And after the market sells off for a little bit, then the reasons start to come out. Okay. Then the reasons start to come out. And, are we in that same mode? Sure. But when you ask, okay, what's the catalyst to send the market down? Well, the catalysts are already out there. Government debt and fiscal responsibility. You can make bearish arguments for housing. You can make bearish arguments for the economy. You still have Europe issues. You got China. You know what? There's probably not going to be something new. It's probably not going to be some new. Oh, wait a minute. We have this issue that the market has to get through. It'll be the creeping up of something that is already there, very much like it was in '07. Okay, and I'm not saying that that's got to happen or that will happen. Just saying the market's in a very similar place. Okay, just in a similar place overall. That's it. Okay. All right, let's go talk candles. And to do so, I am going to come out of here. Let's chart something. We've been talking about Las Vegas Sands today a little bit, so let's chart Las Vegas Sands. And my favorite two technical indicators to use in regards to candlestick analysis, okay, is number one, the commodity channel index, and number two, the money flow index. Okay. And I just keep the parameters as they are. I'll put the CCI above the price and you can see it better. Let me click annotate. Somehow I zoomed my screen in a little bit. So we hit annotate here. And we have the MFI and the CCI. And in general, these two indicators are much like most technical indicators out there. They will go up when the stock goes up and go down when the stock goes down. Right? They do a nice job of that. They're followers. There's not really that much anticipatory nature about it. I can't look at Las Vegas Sands today and say, well, the CCI is at 61.95, so that means Las Vegas Sands is going up. And I can't say that that means Las Vegas Sands is going down. At the same time, I can't come look at the MFI and say, you know what, the MFI is at 62.01, that means the stock has to go up. No, that's ridiculous with any kind of technical indicator. So how do we use the CCI? How do we use the money flow index? Well, let's talk CCI, commodity channel index, and this is just dealing with the price action of the CCI of the stock itself. And typically over 200 is severely overbought, and below minus 200 is severely oversold. Doesn't mean the stock has to bounce, so let's take a look. Here's the CCI is below 200 right here. When the stock's at 54, before we know it, the stock's at 48 2 days later. Okay, so just because it's oversold doesn't mean, hey, let's go buy it. Vice versa, just because it's overbought, okay, it goes above 200 right here. Okay, it goes above 200 back here at 58 and really never pulls back, does it? Okay. It went above 200 just recently here. Okay. Las Vegas Sands went above 200 on this little breakout here. Kept going up. Okay. So to use the CCI in a vacuum doesn't make a whole lot of sense, but in conjunction with candlesticks, it makes a lot of sense. And what I'd like to do is I'd like to play bullish reversal candle patterns when the CCI is oversold, and play bearish reversal patterns when the CCI is overbought. And that kind of goes to the nature of candlesticks. Okay, the nature of candlesticks and trading candlesticks is reversals. Okay, it's reversals. That's kind of the nature of them. It's not for riding trends. Sure, there are a few continuation patterns, but overall, the nature of candlesticks is for reversals. Okay, and reversals, okay, reversals are much more likely when stocks are overbought or oversold. Okay. So when stocks are overbought, oversold, reversal potential much greater out there. So if I'm playing candlesticks, I want to be looking for overbought situations to play a downside reversal. I want to be looking for oversold conditions to play an upside reversal. So here's Las Vegas Sands. Here's a gravestone doji on Las Vegas Sands. Okay. Right here in the middle of October, a gravestone from a severely overbought position on the CCI. I can't argue anybody wanting to short this. In fact, talk about a picture-perfect setup. Yep, this one didn't work, right? That's been the nature of this market. It's just been a little overzealous overall, right? But we have a strong bearish candle, good volume, overbought position. It's an ideal setup. Okay, you trade these setups, you're going to be right way more often than you're wrong. Okay, let's see if I can zoom that. There we go. Does that help there, Trade Hound? So I'm not quite familiar with all the nuances with this zoom tool. I'm learning. But hopefully that zooms it in there for you a little bit better. Okay, but at this point, we had the the overbought position up here on the CCI. We have the gravestone candle, and we had some decent volume that day. It wasn't tremendous, but it was decent. Okay, that came in, but an ideal setup. Take a look at this day, and this is a day, I remember very well. But this is a day where, here in August, where the CCI was oversold. CCI was oversold, and we got a kicking candle. Okay, kicking candle come in, a bullish kicking candle come on in. Volumes weren't tremendous on it. Okay, but from an oversold condition, I'd be much more apt to trust a bullish candle. Doesn't mean I have to trust them all. Okay, in fact, I didn't trust this one. But the overall breakdown was so much but this ended up turning into a bear trap and turning higher. But in looking at these candles, whenever you're looking at a gravestone or a bearish engulfing or a dark cloud, you're looking for an overbought CCI. Okay. Steve, you asked Jeff, in an oversold CCI, would you look for a hammer candle or bullish reversal? Absolutely. Oversold CCI. Look back here in June. Okay, so right here in June, we're oversold on the CCI, right? And we have the strong pullback, and then we get this little kicking candle go on, where basically the stock gaps up above the prior day's open. And so this is a nice little kicking pattern happening from a severely oversold situation. Absolute, hey, no problem going after a bullish reversal in that type of a situation there. Whether it be a dragonfly doji, whether it be a morning star, whether it be an abandoned baby, whatever that bullish reversal candle pattern is, if it's happening from oversold, it's a lot easier to trust. Okay, so that's the CCI. CCI minus 200 oversold, above 200 overbought. Now, the MFI is one of my absolute favorite indicators out there. I love the MFI, but the caveat here is the MFI over the last 3 years has lost some of its accuracy. Why? Well, the MFI is the money flow index, and you can think of it as the RSI, and more than that, the RSI on steroids. Okay, it basically takes the RSI calculation, a little variation of it, and it adds volume to it. Okay, it adds volume to it. So why would it be losing some of its accuracy? Well, because volume just doesn't matter like it has before, right? I mean, the volume picture just doesn't mean as much today as it has in years past. That said, I still love to look at it and understand the overbought, oversold positions. Okay, so if we take a look here, I'm just zooming in. Anything above 80 on the MFI is severely overbought. Okay, we get some sort of bearish candle from this severe overbought position. I will trust that more. We had that here, mid-September. Now with Las Vegas Sands, we don't really have an oversold position, but if the MFI were trading below 20, okay, and we were severely oversold, and we had some sort of bullish candlestick pattern, that would be worth going after. Now, the MFI and the CCI are just my two favorite indicators when it comes to overbought, oversold. But there are a lot of indicators that show overbought and oversold. Okay, we can even take a momentum indicator, like let's go put on the MACD. Okay, let's just take a momentum indicator. Typically, telling us, okay, when's this thing going to be trending up and trending down? And let's take the market itself. Okay. Well, for the market, above 20 on the MACD tends to be pretty overbought. Okay? Historically, we see pullbacks happen when the MACD is above 20 on the S&P 500. Okay? So we're there. We're now overbought. Okay? And you've noticed a lot of reluctance for me to trust any kind of bearish reversal patterns here recently. I'm not as reluctant now. As the market becomes more and more overbought, I become less and less reluctant to trust bearish reversals. And I become more reluctant to trust bullish reversals. Okay, I get a little nervous about some bullish reversals and go, really? We're from an overbought. Do I want to trust bullish reversals? At the same time, when we're oversold, I'm not necessarily going to trust bearish reversals. But yeah, I mean, if MACD is your favorite indicator, you can use that. Whatever technical indicator you like from an overbought, oversold position, the bottom line is your candlestick analysis will tend to be better if you're using it from overbought and oversold positions. Okay. In fact, take a look at the market. The MFI here on the market, above 80. You don't see that very often. You just don't see an MFI on the stock market go above 80 very much. It's happened a couple times this year. Happened here in July. Okay, and it was a while before the market rolled over. It took it a while to roll over. It happened here in May and continued on higher for a little bit. Okay, so it doesn't mean it has to go down, but as far as trusting downside signals, a little more trusting here than even a week ago or 2 weeks ago here in this market. So whatever candlestick pattern you like. Do you favor bullish ones? Do you favor bearish ones? Do you like engulfings? Do you like clouds? Do you like doji stars? Do you like haramis? Do you like, any of these patterns? Bullish breakaways, bearish breakaways. Okay, whatever one you like, make sure it matches. Okay, if you match it with an overbought or oversold condition, your probability of being right increases. Now, what's the problem with that? Well, if you're always waiting for an overbought or oversold situation, you may not have a trade very often. You may only get a trade once every 2 or 3 weeks. If you're looking for a trade every day, you're not going to be in that ideal scenario all the time. Okay, but when you're in that ideal scenario, kind of like we are right now, okay, where much is overbought, we see bearish reversals, they become very trustworthy. We're in that kind of ideal situation right now. So as you kind of go through, I encourage you to kind of look at that, the overbought, oversold in relationship to the candles. Now, admittedly, I haven't gone through a bunch of stocks here this morning to look for these bearish reversal candles that are potentially setting up here. I was on video for quite a while here today. Some of the ones, though, that are setting up are really within the energy sector. A lot of those potentially setting up. Now, I mean, there's a long way to go, especially with the Fed here in an hour and a half. So to trust any of these candles right here, just not very wise, not something that I will do. But, we see things like ConocoPhillips and with bearish engulfings today from overbought positions. They can, we're talking about a pretty nice setup. We see something like EOG Resources been on a great run and now getting its second bearish reversal pattern in a matter of 2 weeks. MFI is not overbought yet, okay, but let's take a look at the CCI. Just slap that on here. We have a CCI that's not in an overbought position right now, but has been in an overbought position recently. Okay, so you don't have that great overbought position right here, right now. So you say, well, do you want to trust it? Okay, do you want to trust it? Okay. Now, if you're solely using overbought, oversold to trust your candlestick patterns, like I mentioned, you're not going to get a ton of trades all the time. But what you can do is instead of taking and looking for overbought, oversold on a daily basis, take a look at it here on an hourly basis. Okay, the same overbought, oversold principles work. So EOG Resources, even yesterday at the close, was overbought. Now we're getting a bearish reversal today. Yeah, the daily chart isn't as overbought as it was 2 weeks ago, but from a shorter term standpoint, we're overbought. Can we trust it? Sure. You could narrow that scope down a little bit. You can narrow that scope down. Take Las Vegas Sands with a bearish potential on its candle. Okay, it's not really overbought right here because it's already had a small pullback, but this morning hit positive 200, hit an overbought situation. If we end today with a bearish candle on the daily chart, can you trust it? Yeah, you're not going to be right all the time, but your probability of success goes up. So instead of saying, well, I need overbought or oversold on the daily charts, just take a look at the hourly charts. Okay, take a look at the hourly charts to play that little bit of overbought and oversold. You take the broader market here, right? I mean, we don't really have any overbought going on here on the hourly chart because the uptick has been slow, steady, and constant, so it won't create an overbought situation. So for the broader market, do you trust a bearish candle? A little tougher, a little bit tougher. With the IWM, with small caps, we did create an overbought situation. Okay, a pretty nice overbought situation yesterday morning, and now breaking down from that. Okay, we're in a little bit of a short-term oversold. Okay, so you kind of have to ask yourself, all right, which way do you want to trust? And so if you're looking for bullish engulfings out there on the IWM, and let's say the daily chart today on the IWM gives you a bullish pattern, okay, which very unlikely, okay, but you could trust that bullish pattern as it hit a little bit of oversold today. But yesterday hit overbought. Now we're having a bearish pattern. I'd be much more apt to trust the overbought and play it lower than to trust the oversold and play it higher here. Let's just go take a look here at XLE, right? Here's XLE, okay, and we had the island reversal happen from a strong oversold position. Okay, I've got very bearish candle pattern, strong overbought position. I can't. That's one of the reasons when I mentioned XLE, we have oil weakening, so we have that negative divergence. We have the candlestick pattern here, the island reversal happening from an overbought situation, and now within the MFI, even today, we're up in that overbought situation. I hope that kind of explains some of my reluctance to want to get out of XLE here, and some of my angst to want to get into more XLE here. Okay, to the downside. But again, not every setup works, but it's a picture perfect setup, and it's going to work way more times than not. All right. Well, any questions in regard to the CCI or MFI and how they relate to candlesticks? Feel free to let me know, and happy to help you out there. Okay. Thanks for logging on, and we will talk to you here in about 90 minutes when the Fed report comes out. Take care.